Hey everyone, welcome back to Streetwise Economics. If you are new here, I break down the latest market news in a way that's easy to understand so you can make smarter investing and trading decisions. This week, we have seen big moves in the US market, major headlines in the bond and currency market, and a crucial court ruling on tariffs that could shape the months ahead. Plus, some blockbuster earnings from companies such as Nvidia, Salesforce, Ultra Butte. So let's dive in. Quick reminder, this video is for educational purposes only. Investing and trading involve risk. What I share here is based on my own research and experience. Always do your own due diligence before making any investment decisions. So, the first thing I will touch on is the US stock market update, particularly focusing on the S&P 500 and major movers and earnings. Let's start with the S&P 500 and the broader US market. After a choppy start of the week, stocks have rallied strongly on the back of Nvidia's blowout earnings. I'm recording this video on the 30th of May 2025. Nvidia stock jumped over 4% in after hours trading thanks to a 73% year-over-year surge in its data center business and results that blew past Wall Street expectations. This has reignited optimism in the tech sector and the broader market, particularly the equities market, with the S&P 500 up about 5.7% for May and the Nasdaq up a whopping 9.5% at the time of recording. Salesforce also beat earnings expectations and raised its full year outlook, giving a boost on software stocks. Other notable earnings included Costco, Marvell Technology, and Gap, with most of these companies either meeting or beating analyst expectations. Gap dropped quite significantly. The last time I checked, it dropped by over 10% after reporting earnings. And Costco is a fantastic business, which also had their earnings report this week. Despite the lecture session midweek, the S&P 500, the Dow, and the Nasdaq are all finishing the week on a positive note. At the time of recording, even though the equities market is down, anything can happen in the market anytime, but it seems like they are all still gonna be on a positive note this week. But again, anything can happen, like I indicated. The tech sector is fueled by the AI announcement and strong results from Alphabet and Nvidia. These have been standout performers, with Nvidia up over 10% in May alone. So the other very interesting market that I look at is the US bond market. Yields have surged on fiscal concerns, and US Treasury yields have surged to some critical levels. If I look at the 20-year and 30-year Treasury yields, both spiked above 5.1% this week, driven by Moody's credit rating downgrade. And also the weak auction and mounting concerns of fiscal deficits and Trump's proposed tax bill. The 10-year yield crossed 4.6% as well over the same period. So higher yields mean higher borrowing costs for everyone, from US government to homeowners and businesses. The Federal Reserve has also signaled it will likely hold rates steady for the next two meetings as the policymakers meet, and also want to watch how the tariffs and fiscal policy plays out. Chair Jerome Powell and President Trump actually reportedly met on Thursday, the 29th of May, and they have their differences. President Trump is pushing for the interest rates to be dropped, whilst the Fed chair and the Federal Open Market Committee members, they are indicating that they are going to be influenced by economic data and not by political pressure. So that's something that's interesting, and it's another cornerstone in the US market, at least from my understanding, that they want to keep the Federal Reserve independent of political persuasion, because things can potentially, go downhill if there is that interference. Now, I also like to keep an eye on the current market. The US dollar, it weakened, and in the current market, I like to actually just compare the US dollar with the other basket of currencies. So if you look at the US dollar, compare it to other currencies, it has been going down, weakening by about 8% year to date, if you look at the statistics online. And the GDP Q1 print, it came down minus 0.3% this week, and the ongoing uncertainties on tariffs is the one that I think is causing this drop or contraction in the gross domestic product, particularly in the US. So the Federal Reserve policy has weighed in on the dollar, while there's a chatter that the dollar is going to lose the global reserve status. It still, in my view, makes up about 58% of the global reserves, and I don't think there's need to panic, but there's the possibility and the talk that the Chinese renminbi might actually be another preferred reserve ratio, reserve currency. So that's something that history lovers would know that, there was the time when the Spanish Empire was the dominant force in terms of shaping the global affairs. Then you had the Dutch Empire as well as the British Empire. So some analysts are predicting that if the US is not careful, China or other powers might actually overtake the US. It's something that's speculative, but it's something that is debatable. But clearly, a weaker dollar can help exporters, but it makes importers, you know, be in a hard spot, and overseas travel can be more expensive for Americans. For investors, it can be another factor to consider when looking at international stocks or global diversification. Now, the trade court ruling and tariffs came into spotlight after the US Trade Court ruled that President Trump had overstepped in terms of the tariffs that he enacted on the Liberation Day, in terms of the authority that he has. My understanding is that they say the argument is that the authority to make such major moves should be at the behest of the Congress. So this initially brought some relief on the markets, but when they appealed and they were given a stay, meaning that most of the tariffs will remain in effect for now, the market actually pulled back. And if the ruling had stood, the average US tariff rate would have dropped from about 15% to just 6%. And the temporary uncertainty caused some volatility, like I indicated, but chip makers, banks, and luxury goods stocks rallied on the hopes of lower tariff barriers. The administration in Washington is appealing, so this story is not over yet. For now, investors should expect continued uncertainty around trade policy. Now, you might have heard about the taco trade, which stands for Trump always chickens out. It's a tongue in the cheek where some traders describe the market reaction to policy shift, especially when tough talk on tariffs or regulation is followed by a softer stance. Sectors such as tech, artificial intelligence, chips, and outsourcing have been leading the charge. Companies such as Nvidia and Google have been posting strong performances, and despite these headlines, I'm staying focused on the long term in my portfolio, prioritizing quality businesses with solid cash flows, growth prospects, little or no debt, such as Apple, Amazon, JP Morgan. Now, let me quickly summarize or provide an economic data recap on what moved the market this week. This week, the most moving The most market moving releases were the US weekly job claims that rose more than expected, signaling some cracks in the labor market and sparking some concerns about the pace of economic growth. The Q1 GDP came in at negative 0.3%, reflecting the impact of the tariffs and weaker consumer demand. Both of these added to market volatility, especially in the bond and currency market. Now, my final thought is that the US stock market is ending May on a high note thanks to the tech and AI leaders. At the time of recording, like I said, things can change anytime. The market is still open in the US and even here in Canada. The bonds yields are surging, reflecting fiscal worries and Fed caution. The dollar remains weak and trade policy is unpredictable as ever, which is a risk premium that investors have to pay for. So now, if you want to learn more easy to understand market commentary, make sure to watch more videos on this channel, subscribe and hit the bell so you never miss an update. For those looking to deepen their investing and trading skills, book a one-on-one coaching with me at www.streetwiseeconomics.com. Stay wise, stay patient, happy investing, and like I always like to say, trade and invest wisely, and may the markets be on your side. See you next time. Bye bye for now.